Good morning, traders and investors around the world, and welcome to Friday's edition of Premarketinfo.com, where we prepare you for these crazy JP earnings numbers.
Friday the 13th, too, there.
Woo!
Uh-oh, what's that mean for investors? Anyways, JP Morgan did report today. It's volatile. After the report, they disclosed their losses from the whale trade as well. Wells Fargo reports earnings too. They've just reported here, and Citigroup will report on Monday. We'll discuss all of that. And the rallies and Procter and Gamble are Merck yesterday. Crazy rallies for those low beta stocks. We'll look and analyze those. And then we want to talk about dogs. LXK just reported, or actually they didn't report, but they lowered guidance. Best Buy and Hewlett Packard. I just want to talk about those two. They've been dogs. When these types of dogs pop, investors or traders should try to capitalize on the move.
What about the market that won't die? We sold off hard yesterday. Couldn't quite get to that 13.16 level I was looking at, and then we claw our way back to 13.35 and just sputtering. But this market is just like just a sick dog that you just can't put to sleep yet. I mean, it just keeps clawing back.
Yeah, it keeps clawing back. Yesterday, obviously, just bringing up the daily here. Yesterday, we sold off, got down below 13.20, and then we just started rallying in the afternoon, taking off, got up to 13, and now we're at 13.32. So we've come back quite a bit from the lows yesterday. What was the low there yesterday, Joel?
13.1975.
Okay, 13.1975. Obviously, keep an eye on that number. You always want to take reference points of the previous day's lows because those numbers can come into play because buyers may be picking bottoms at those spots. So keep that in mind if we started to go into sell-off mode. We are up 3 here, though, and JP Morgan, that has been moving this morning. It is all over the place, Joel.
Are you prepared for my JP Morgan rant?
Uh-oh. Give it to me. Give it to me. I'm ready.
This should never have happened. I mean, they're talking now, we're looking at the losses, but Jesus Christ, this is one of the biggest banks in the world, and they even after everything that happened in 2008, 2009, you just have something like this happen to one of our biggest banks. I will never own JP Morgan. I will never have an account at JP Morgan, and I'm going to close my eyes when I drive by a Chase Bank. I mean, they're getting off the hook so goddamn easy from this. I mean, this is ridiculous. In this day and age with automated trading and risk rewards and loss ratios, for something like this to happen, I don't care how much they lose on it. It shouldn't have happened. And if I would have been grilling Jamie Dimon, I would have called him an idiot for letting this happen.
Well, we always talk about risk management. When you're in trades, you need to be aware that you need to have an out. You always need to know where I'm going to get out. Never get big enough that you can't liquidate the position. Like, that's just scary in itself. You never want to be bigger than the market where it takes you days or weeks to liquidate a position. I mean, when stuff starts moving that much against you and you're that big, that's when you're in real trouble. So first of all, never get that big. Secondly, don't let the trades go that far against you. But at least we know they have quantified the losses a little bit farther here for us today. Actually, the stock is up a little bit. It was rallying even farther earlier. They quantified that they've lost already $5.1 billion, and a worst-case scenario, they're going to lose another $800 million to $1.7 billion. So it looks like in a worst-case scenario, they lose $6.8 billion on this. The market actually, when that came out, JP Morgan reported earnings around 7 o'clock. Stock went down. What was the low there? Do you have the pre-market low?
It got down to 33.38.
Got down to 33.38. Was trading around 33.65, and then Jamie Dimon got on the call and said, well, at worst case scenario, it's only be another 1.7 billion. And then the stock started popping, got all the way up, believe it or not, to 34.96. So moved way up here. Now it's back at 34.18. So it's volatile today. Expect the volatility to continue in the regular session. But take note of those pre-market lows and pre-market highs if you're trading the issue, because those can come into play.
Can you buy Jamie Dimon puts anywhere?
You're still having your Jamie Dimon. Why don't you invent that so you can put puts on the CEO's bet? That should be out there where you can bet on that, whether the CEO is going to get fired or not fired. Like, I don't think they're going to fire Jamie Dimon. They're actually have been saying that he's done. He's saying everything right is what they're saying. Obviously, I still don't love the way controlling the risk.
Shouldn't have never happened, and that's my final take. But I just a a quick technical look. I'm not gonna give you the highs. I mean, the highs and lows for the pre-market are there. I think the market is still digesting all this information on this. We had talked about the low at 30.83, and then the rally up just to the $37 level. Basically a 6 point move. I've been talking about this $34 level because that's a 50% retracement of this entire rally. I would keep an eye on that. If it can keep holding in and closing above 34, I see 33.94 was yesterday's low. The previous low was 34.12 and then 33.81. This is the level that it needs to hold. And if it can hold there, then yep, it has a chance to go back up and test those highs at 37. We get a day, a couple closes under 34. It's going right back to 30.83 and then zero.
And then zero. Well, I don't know. I'd buy it at zero. I'll bet a penny on it.
You
So
will. Oh,
so
you
I
high
might and I might
frequency
sit there
trader.
pretty
You're gonna be a
heavy
high
betting.
frequency
So
trader. Okay.
I'm heavy bid at a penny, so I'm going to try to stop it from going to zero. Wells Fargo did just report here as well. Stock is trading down just slightly. Actually, on the initial report, sold off a little bit more, bouncing back now, only trading down a dime, 32, only a nickel now. 32.80 is where it's trading at after closing at 32.85. What's your take on this one?
The stock has held up pretty well. I mean, overall, since in the market sell-off, I'm just going to give a general area on this stock too. This whole 32.50 area. If you go back a few months here in April, you had a lot of lows and consolidation there. Then you rallied above it. Then when you finally broke through that area, you had to break under 31. You came back up to 32.50, went back down. Finally, you got above that area. You had a nice rally. We've had a lower low than that in the pre-market, 32.30. I'd keep an eye just on this whole 32.50 level. Is when the market is, when a stock has spent as much time consolidating in an area. I like to focus on that area and go with it. If it gets two or three closes in one direction or another.
This has had consolidation compared to the other bank stocks. Like even take a look at like a Citi or something, or obviously the J.P. Morgan. This Wells Fargo chart is just consolidated. It's sitting here just a buck and a half off the highs there. 34
52-week highs.
The 52-week highs, yeah.
Yep, multi-year highs.
Yeah. So this whole area, it's definitely had a lot of consolidation. I mean, it seems to get into the upper 33s here. It runs into sellers. We can just look at the highs here: 33.35, 33.68. It gets in the upper 33. So if for whatever reason this turns around, actually it's up a nickel now, 32.90. I think this gets up into that area again, that 33.60, 65 area. I think it'll start to run to sellers again. 34, obviously major resistance. And what's the 52-week high? Just in case this thing really takes off, what's the 52-week high on this?
The 52-week high is 34.59. But can you pull up a monthly real quickly on this? Because if you look at the monthly on this, going back to 2010, you had a high at 34.08.
Okay.
The following month in May, you had a high at 33.92.
Yeah.
It kissed that level again in February of 2011. Then you made three good cracks at it in March, April, and May of this year. I mean, that's just a super crazy resistance level. We're still a buck away from there, but she's trying to get there. But boy, someone's sticking their nose out under 33 for the last 32.79, 32.73, or excuse me, 33.73.
Yeah.
So keep an eye on that area. But man, if this thing can break above that 34.5 level, it's got room to the upside.
Yeah, not going to see that today, but if it gets up there, I think the first few times will probably run to sellers there again. So keep an eye on that. This thing was to rally a buck for whatever reason. I think you'll find sellers. Citigroup, they're going to report here. Just bring up the daily for you. They're going to report here on Monday. Stock is trading just slightly up here off of the J.P. Morgan, Wells Fargo. But here's another one. Instead of you look at the Wells Fargo, which is just a buck and a half off its 52-week high. This thing's a buck and a half off its 52-week low. So you've got two different stories here. Obviously, Citigroup still doesn't have their stuff together here, obviously. Trading 25.28 is where it closed, but we are dangerously close to where that low was back in June of 24.61. So starts to take that out, starts to get ugly again. Then you got to go back to last year, look at 24.40. There was a low there just in December. So stock chart not nearly as pretty as the Wells Fargo one.
Well, you know what the C stands for in this stock?
What's his
Conspiracy.
conspiracy?
Yes, yes, because it's at $2.50.
That's
It's
what.
not a.
Yeah, I know. That's the funny
It's not a
thing.
$25.
Yeah, because they did the reverse split there, and
Yeah.
here's the funny thing. I had somebody, and you know, it's just people that don't know the stock market. They're like, they were talking about AIG, saying, "Oh well, look, but AIG's come back so much." No, it hasn't. They reverse split that one 20 to 1. That thing's at $1.50 right now in real money. So if you're looking, you go out to the monthlies on that, the high is up there in the $2,000 area because they did that reverse split thing. So obviously Citigroup's the same story. You're right. The thing is at $2.50 if you really talk before it did the reverse split, because all-time highs are up there in the $500 area now.
Yep.
So
550. Yeah, this is
550.
just bumping along 52-week lows. And interestingly, you can, I don't know how far you have to go out on the chart, but when they did the reverse split, that stock was up, I believe, around $5, and it just got crushed,
Yeah.
and it came down. Now you're really dangerously close to the 52-week low. Looking at the dailies, you have a reference point here at 25.15, getting a little prop in the pre-market. I'm sure there's going to be buyers here from 25.15 down to that low at 24.61. So just call that the $25 level if you're looking to, for a long-term entry point in this stock before you get stopped on the downside.
Yeah, I think that's. I always tend to like stocks, buying stocks going up as opposed to trying to pick bottoms of stocks going down. I mean, if you're investing in the thing, and I don't think I would even want to invest in Citigroup, but if you're investing in stocks, a different story than trading. But I'm always a bigger fan of momentum, especially with the high frequency trading world we're in. Momentum seems to work. Let's just look at stocks like Best Buy here, for instance. Look at the chart on Best Buy. Obviously, it's been a complete dog. If you go back even farther, it used to be 45, 47 bucks a couple of years ago. Now it's trading down at $19. We had this ridiculous rally here just over the course of the last month where, they're going to take the stock private and, everybody's going to make a lot of money on this. Well, look what happens. 2 weeks after those rumors, the stock is right back down to where it was before. You need to take these opportunities. If you're an investor in this or if you're trading this, you need to take these opportunities. When these dogs spike, eventually sellers come in, and they come in pretty quickly. Like, it was only up there for a few days, and as soon as the rumors don't materialize, the stocks go right back down. I mean, how many times have we heard, research in motion is going to get taken over? How many times have we heard that? It gets a dollar or two spike on it, and then eventually just starts drifting down again. When the rumors don't materialize, the stocks just continue to go down.
Yeah, if it comes out in a day or two, I mean, obviously we're not talking about taking these stocks home short overnight. You don't need that kind of exposure. What Dennis is talking about is if you own a dog like this, if you're, bottom fishing, you get a spike like this. If it's not immediate follow through, then get the heck out. We got a reference point here at 1887. That was low just before all that Michigas came out about it. Below that, you have 1839, 1847. So you got a couple of reference points. Shorts may be looking to bring it in. Just to digress from the technicals here, brick and mortar. I talked a lot about this in my unemployment blog. Brick and mortar is dead. I don't know what that means for the rest of this economy, but big stores like this, people come in, not me, I actually go in there and buy things and leave. But people go in there, they look, they get to see what there is, and then they go buy it over the internet.
Well,
and that's exactly what's happening here.
Yeah, that's the problem too. Yeah, you go and you physically see the product, and then you can get it cheaper on the internet. People find places to buy stuff cheaper, obviously, on the internet. But that's like when you were citing in your article, that's the overall problem with the overall economy too. There's a lot of sales, service jobs, construction jobs to build these things. Like, people are buying stuff over the internet. So the big brick and mortars buildings and those businesses are in trouble. So, and stuff like this, I just don't see, like, look at a Radio Shack. Just going back.
Radio Shack, how about your
Radio
favorite
Sack.
store? How about your favorite store, J.C. Penney?
That's getting rocked there too, right? Oh,
yeah.
I've always been, and this is the other thing too that I've got the gripe on. This is one, you want to short it, but some of these stocks are so expensive to borrow. Like I was always talking about that Groupon back in the day. I was like, it's ridiculous to be at $20. Now it's at $7. But the problem is that the stock was up to 120% a year to borrow the thing. So how can you short it if a stock's if it's that much to borrow and you stay short for 9 months, it doesn't go to zero, you lose money. So, and J.C. Penney, Sears Holdings too was another one. SHLD. That stock, when that thing was up at 80
Brick
bucks,
and mortar. Yep.
when that stock was at 80 bucks, I was telling you, I was like, I want to short this thing, but at 60% was the fee to short it, so 60% a year. I'm like, well, that's just got to go down, so if I hold this for a few months, I'm already going to be down 25%. I probably would have made money because I think it fell faster than the short fee was, but its timing is critical when you're shorting the things. Years ago, it didn't cost that much to borrow these things, so you could just short it and forget it. You can't now. You have to time it right, so basically everybody loses in this case. The only person that makes money is the broker or the person loaning out the stock, but they don't even get that much. It's usually the broker, the middlemen people that are really making the money off of it.
Maybe they'll call it J.C. Penney stock.
I think, well, and this is something, if you're picking a bottom on this, I think you're probably going to be not too happy after so long. Sure, when these stocks start to pop, even look at like a Hewlett Packard, when these stocks have these pops, they always seem to come in and they find more sellers. People know Apple's taking Hewlett Packard, beating them to a pulp, and obviously, and then how do you know that you see, you can go in, you can see Apple, they charge $2,000 for their computer, Hewlett Packard's charging $400 or $500, people are still buying the Macs. So I just don't know how, they keep cutting the prices. Their margins are razor thin, and they're still not selling that many computers. So they got to sell them for $400 or $500 just to get them out the door. Here's another one too. Lexmark today, LXK cut their guidance. Stock is trading down at $20.90. This is another one. There's been a huge dog. It's been down all year. Gets this pop, ridiculous rally in June up to just the beginning of July where we got up to $28. Now the stock starts to sell off, gets down 24. Now it's at 21. Again, this is another story. What is this? They sell printers. So you can buy
Aren't printers free? Don't they give printers away?
Well, they definitely lose. I'll tell you right now, they're losing money by selling the printer. They're just hoping you do the ink thing. But people can even fill up the ink cartridges themselves. So I just don't know how you can own these things for investments. They're tradable vehicles, but when these things rally, it's usually opportunities to just sell short.
Okay, this shows how long I've been in the markets. I keep putting HWP in whenever you mention it. I'm dating myself here, but this stock is just treading above this $19 level, 1902.
Yeah,
was a low a few days ago, and then you had a low at 1912.
Yeah.
Holy smokes, man! If this thing can't hold $19, I mean, Katie barred the door.
Yeah.
I do see a low at 1850 back in November of 04, so you might want to get a few bids there. Below that, you have the 1758.59 level. Of course, you got a lot of people churning and burning this stock, after it gets done out of the, volatile, first 10, 15 minutes of trading. Then your buddies, HFTs, get in there and just chop around and, try and make their sub pennies on it. But holy smokes, keep an eye on this $19 level.
It's huge.
At Lexmark, as long as I've been following this stock, I don't think I've ever heard them come out with good news. I mean, it's just always, they pull it down, and here you are, you're crashing down in this stock, making a new 52-week low, going out to the monthlies here. I mean, this 24.50 level tried to hold on. We are trading substantially below that. You got to go back to October of 2009, you had a low at 1976, so that's your next major support level. Looking at the pre-market activity, you're just dipping and ducking. There's no pop in this thing right now.
No.
So keep an eye on 2075, which has been the pre-market low.
I don't think these stocks are going to get pops either. Like Hewlett Packard here, you can look at this thing and say, oh, look at the nice support. It's got their 19. I'm going to buy it here. Eventually this thing, it's got good value. It's going to be back at 24, 25 bucks. Research in Motion, same story. They've been saying it's a value trap. These are value traps. They've been saying it. It's got value for the last 2 years. Apple is taking them and beating them. If this thing takes out 19, I think it's a great short. Obviously, you can always be, people say, oh, it might get taken over or something like that. Research in Motion hasn't been taken over yet. So when I look at Hewlett Packard, I think about Research in Motion. I think the stock's going lower, just my opinion. Gets below $19, I think you short it, but that's my opinion.
That's the last reason to buy a stock is you think it's going to get taken over.
It really is. And, and that's the thing even with the Best Buy. Oh, it's going to go private and I just think you got to look at the fundamentals of these things. These companies standing by themselves need to obviously reinvent themselves, or they're in big trouble.
Okay, just looking at the market here, just a quick recap. This 1335 level, been talking about it for a couple months here. That area marks the 50% retracement from the high that we had back in March. You go to and take that. That was 1319.75 or 1413 and a quarter. That was the old contract. And you take that down to the low that we had of the move, 1255.50. This 1335 area represents the 50% retracement of this whole move. We've jogged above it. We've jogged below it. Now we're consolidating there with a couple highs and a couple closes. It's a big number. The Globex high is up there at 1336.75. I would not be looking to take an aggressive long position in this market until it holds that 1335 at least for a couple hours during today's session.
Before we close, I just want to highlight one more stock here, which is Johnson & Johnson. This 6810 area is insane. I'm just going to show you on the chart. I actually shorted it again yesterday. I've played this a few times off this level. Eventually, it's not going to work. The trade's eventually going to start to take out and go above 6820. But man, this level here, even if we bring up just from the last few days, and I'll bring up the last 10 days on this one for you here. Look at this 6810 area. 1, 2, 3, 4, 5, 6, 7 times. It just keeps topping out here and then selling off. It's been a great area. You make 30, 40 cents on that probably a dozen times here over the course of the last 10 days. So keep an eye on that 6810. I'll probably be trying it again if it starts to trade 6820. Always, whenever you put on a trade, always know you're out. My out's going to probably be above 6820, but if it goes up to the 6810 area again, it's just technical resistance.
And you talk about different orders, good till canceled, filler killer, whatever. Well, someone has a GFE order in.
What's that?
Good forever.
Good forever. And that 6810 has been a good sell forever. That's a good point.
Okay. All right, folks. Dennis is going to be manning the microphones next week as I take a little R&R and go up beautiful up north Michigan. So I hope Dennis does a good job for the show with you guys next week. And we'll be back.